Okay, we'll start because I think there's people online wanting to watch as well. And of course, these sessions are also recorded. My name's James Duddridge. I was an ex-African banker with Barclays and Minister for Africa under David Cameron and more recently Boris Johnson. It's my job just to make sure everything goes tickety-boo here today. And it's my pleasure to introduce the moderator, Hazel Taylor, from the great CDC Group. Hazel's the Director for Investor Relations and will be managing this panel, teasing out of them all the nuance on Africa private capital markets. Hazel launched the Investor Deck in 2020 to deepen CDC's relationship with peer investors and increase the commercial interest in Africa and indeed Asian capital markets. She was formerly Business Development Director at Acumen, raising early-stage private equity, particularly serving low-income communities in Africa and Asia. She's also worked in other private sector groups, including in the Swiss Stock Exchange and including in the not-for-profit sector in Europe and Asia. We are very pleased to have you here, Hazel. And with that, I'll hand over to you, and I'm all ears.
Thanks so much. Hello, everybody here, and hello to everybody joining us online. My name's Hazel Taylor. I'm an investment director at CDC Group. As has just been mentioned, I've just set up a new desk at CDC to create better collaboration between CDC and other investors. So I'm very pleased today to be moderating this panel with some of those investors. Thank you very much to AFSIC for hosting us, and thanks very much to all the panel in advance. We have, starting to my left here, we have Martin Ewald, who is the Portfolio Manager at Impact Investment Allianz Global Investors. We have Anna Maria Harrison, Partner at Adam Street Partners. We have Martijn Pruis, Director at 91, and Eric Reneder from a Portfolio Manager at EMIM, Emerging Markets Investment Management. I just got those the wrong way around, so this is
sorry,
Eric.
you weren't sitting in the right place.
Sorry about that. So I think with that, I think we'll just kick off. I'm going to get the panel to describe in less than a minute, if you can, what is your connection to the title of this panel? So what experience do you have in Africa or private markets or both? Starting with you, Martin.
Okay, so I'm responsible for a fund called Africa Grow. Africa Grow is a blended equity vehicle, so we're the first of its kind. In Germany, we have 100 million of the German government and 100 million private money. And then the beauty of blending is that it allows us to mobilize private capital into African private equity and venture capital investments. And that I will talk a lot about today.
Great, thanks, Martin.
Hi, everyone. Adam Street Partners is a global private markets manager. We manage about $45 billion in private equity and private credit. We invest in other funds through our primary and secondaries practice. We also invest directly into companies, and that's mainly in tech and healthcare growth equity, and in co-investments alongside our GPs, and also direct lending in the US. We started investing in Africa through primary funds in 2011.
Hi, Eric Reneder. I'm a portfolio manager for Emerging Markets Investment Management. We run Africa funds, and I invest primarily in publicly listed equities, local currency debt, and euro-dollar debt issued out of Africa.
Okay, my name is Martijn Pruis. I work for 91. We were known as Investec Asset Management, but we demerged from Investec Group last year and rebranded ourselves as 91. We're a global asset manager with deep roots in Africa. I sit in a part of the business that looks after private credit. We have two strategies there called Credit Opportunities, multi-asset funds providing direct lending to all kinds of sectors. And another fund that we manage there is the Emerging Africa Infrastructure Fund, which is a long-term debt financier of privately owned and managed infrastructure projects across the continent.
Fantastic, thanks everyone. And for those of you with experience in both Africa and in private markets together, how have you found the performance to date? Over to you, Martin.
So for us, we started investing in 2019. So far we've done 3 GP investments, 2 Northern African, 1 Eastern African. With regards to the performance, so therefore it's quite early to really tell, but what we do see is already exits happening, especially in the more liquid markets, which is quite crucial on the private equity side, I guess as we all agree. And so far, so good, but as we're 200 million and just about to be investing, so it's very early to tell.
Great, thank you. And
Yeah, for us it has been a good story as well. So we have been able to deliver the returns that our investors in the different funds have requested us. I think an interesting point to say, and I say there's a lot at these conferences, is that Africa is an interesting investment destination. It has its challenges, as everybody is aware. But for instance, if you look at our infrastructure portfolio, the fund has been around since 2002, has deployed about $2 billion of capital, and our loss rate on a kind of B-rated portfolio is less than $50 million to date, which shows that Africa is a good investment destination where you can make returns, have impact, and actually achieve loss rates that are lower in the infrastructure space you see elsewhere in the globe.
great, thank you. And we've already heard that the conference has only really just begun, but we've already heard about a lot of changes going on the continent, technology leapfrogging, new logistics corridors. What does the future hold? Where are the opportunities, and what might it take for you to access them? I'll hand that to you, Eric.
To me, okay. I'm on the public side, but I think if I was, investing, putting private equity to work in Africa, there's 4 big themes I'm interested in personally. First is mobile. Africa's going to add about 100 million new mobile subscribers over the next 5 or 6 years. You have smartphone penetration below 50%. So you have, people using less than 2 gigabytes per month. You're probably going to have 40% CAGR growth in mobile data usage over the next 5-6 years in Africa. So that's kind of an amazing number, right? 40% compound growth in something doesn't happen, very often. So that's I would want to be kind of somehow associated with that industry in some way or another. And on mobile money, so that's within there, you've got about 120 million mobile money accounts in Africa. You're going to have about 600 million mobile subscribers. I wouldn't be surprised if mobile money could go to 250, 300 million accounts, maybe in 6-7 years. So that's a big theme that I would be participating in. Kind of associated with mobile money, but slightly different, is I've been looking at the crypto space, and I thought it was interesting that, is it Stephen Priestley, your financial services director? He mentioned it too. I think Africa is interesting. So the story about mobile money, kind of the backstory was that it was because the original financial system wasn't working very well that enterprising Africans were using transferring airtime as money, and that Safaricom evolved that into mobile money. But it was basically because the existing infrastructure wasn't working in financial services that mobile money came about. I think with crypto and blockchain and decentralized finance, Africa could be the area where that actually takes place on the ground with practical applications way ahead of where it does in the rest of the world. So a little bit on the edge there, but that's another theme I would look at. Third one, I'm from Montana in the western United States, and so the background of the western US is a very isolated area, disconnected from the rest of the world for a long period of time. When the railroads came in, it was transformational for these towns. And in one of the towns I grew up in, it was a big thing. Railroad comes in and farmers can ship cattle and wheat to Seattle or Chicago. And it, allowed parts of the interior of the US to industrialize. You have about 200 million Africans in landlocked countries. You have billions of dollars being spent between the governments and the Chinese Belt and Road Initiatives, multinational lending organizations. You have railroads in Kenya, major railroads in Tanzania going to Kigali, new railroad in Lobito coming out of the port in Angola. Dakar is turning into a major port and airport. So kind of thinking of that analog of what happened in the Western United States, I would be following these major infrastructure projects in Africa and thinking, where could there be real estate opportunities, businesses that are going to have access that they didn't have before, and I'll be thinking about that. And the final thing is also in financial services, I think there's a kind of an interesting opportunity on non-performing loans. There isn't really a market or an infrastructure for buying and selling non-performing loans. In Africa, you need a servicing business, but it's something that came to my attention because the IFC is looking at it. They're like, look, this is important for the development of financial markets in Africa, that these banks can't really get rid of non-performing loans. And so that's the other thing I thought would be is an interesting idea.
Can I just chip in on Eric's remarks, especially on the first 2 points? Like last week I was in Kenya, and it's exactly on spot like what you're saying. Like we saw so many entrepreneurs, especially on the venture capital side, who are just exactly harvesting those themes you're saying, like also in conjunction also with agricultural themes, which I find also mind-boggling. Like when you see like how much entrepreneurial spirit is there, like making use of those opportunities. It's amazing. And maybe just also one remark to blended structures. This is, I don't know in how far everyone is aware of blended structures, especially on the equity side. The beauty of blended structures is you can take on risk, especially for commercial investors you otherwise couldn't. So essentially the public money absorbs the shock or the risks associated with something. And therefore this allows you to, in our case, we have life insurance money channeled into Africa. So then you can scale up. So the beauty for the public hand is like more capital available. Beauty for the private hand is like risks to be absorbed. And this allows to harvest exactly those sort of upsides you just mentioned. On the infrastructure, though, I'm not quite so certain. Like if you see what's happening, what's being built in Kenya by mainly China, I don't know how far that's an open shop, frankly.
What do you think?
I'm not quite so certain there's too much room for entry, but I guess this is more for the infrastructure investors below.
Oh, I meant just like, there might be some town that was totally isolated, and now like there could be, maybe you should be buying shopping malls in Navaisha, where the SGR just finally accessed, and like where could towns double and triple in size, and not owning the railroad, but just like maybe the second derivative of it.
Yeah.
Great, and we'll come to infrastructure in a second.
Yeah.
Actually, we can come to that now because I wanted to talk a bit about Africa as a continent and the diversity there. And where, so there are opportunities in some places. Are there opportunities everywhere? Are there new opportunities? We've just touched on that a little bit through this interaction. But Martijn, from your perspective.
Yeah, in terms of opportunities, well, I can talk a lot about infrastructure because that's what I do on a day-to-day basis. And I do agree with you. If you bring infrastructure, it has economic multiplier effect. You have to do it soundly, and you have to pick the right projects, right? And you should avoid white elephants. Mm-hmm. But for instance, we have backed a long time ago a fiber optic submarine cable along the east coast of Africa. And there wasn't one there. And once that was built, the amount of activity that you see actually on land in terms of building additional infrastructure and other services, I think it is a great way to go. And this is also where I see one of the biggest opportunities in Africa is that if you look at our fund, historically Emerging Africa Infrastructure Fund, we have done a lot of IPPs, and I think they have been largely successful. And I think what I hope to see is that you will see this in water. We have done one in Kigali where we financed a private water PPP, toll roads, rail, the capital of these African countries and the amount that they can finance on their balance sheet, especially post-COVID, is limited. So bringing in the private sector in well-structured projects, I think is a great opportunity. Not only as a primary market for lenders like ourselves to go in at first, but ultimately that's the second step, is that you create an asset class that can then going to secondary market and you pool some of these assets, you create holdco structures where institutional investors become interested in investing. And that's what you've seen elsewhere on the globe. And I think the prospects for Africa are there as well. But you have to build the infrastructure and the asset base first. Perhaps I should stop here.
Great,
and then
thank
I
you.
can mention
We'll
a couple other things as well.
We'll come back. Yes, great.
Hey,
thank
so
you.
if I may add, just back to Eric's comments, I completely agree on the sectors that you mentioned, and something that's as a Chicago headquarter firm that I work for. Once those U.S. firms start coming into Africa, making success stories, whether it's Paystack, Lagos-based, with Stripe, one of our former portfolio companies, or the VC firms that are popping up, or crypto. That could be the best part for GPs in the US to start coming into Africa and getting the attention of the rest of us to start investing there. So those are very important sectors. So tech, but also healthcare. It's really what we are focusing on quite a bit as well. And increasing affordable healthcare needs in the region is something that we're really targeting.
Great, and just to build on the question earlier around opportunities and what it would take, how easy would it be for an organization like yours to access those opportunities at the moment, and what might it take to make that easier?
So I think we're pretty clear the opportunities are there in lots of sectors. The risks or what we can do to make it better or easier for firms such as ourselves to come in would include partnering with local groups that we don't have anybody on the ground, so it's very difficult for us to invest directly into companies in the market. So either partnering with DFIs or other groups that have the experience and the networks. It would imply something that GPs are not in control of, which are the macro parts, the currency, which is something that probably the biggest hurdle for us to invest in the market at the moment, and obviously some exits. If we start seeing some exits in the market, we will be more interested in coming in and putting more capital to work there.
Great, thank you, Anna. So we've talked about some of the opportunities and some of the challenges. The geographical area we've touched on a little bit, but not fully. Are you seeing, and I'll hand this to you, Martin, I know that you're Pan-African in the work that you're doing. Are you seeing opportunities in some places and not others? How does that look geographically for you?
For us, with Africa Grow, we were asked to structure a specific fund with regards to certain requirements. So we have a job target, for example, how many jobs we want to be creating, and in turn with that also we have a country focus around the Compact with Africa countries, which is a group of reform-oriented countries. Also, we do have a broader sector as well. Essentially for us, as we have commercial money in there, we need to go in those markets where there's liquidity, stability, long-term perspectives we can go into, and I think that's a precondition for all of the institutional investors. Maybe one remark also with how we cooperate. For us, it's not just investing into target GPs together with public investors like CDC, for example, but it's also really to integrate that already on the structuring point of view. So structure the vehicle already with public money and then the private money, and then go into targeted funds. So we cooperate already on one level above, which really helps us also to also get more boots on the ground, as you were saying earlier, because I think that's really key. One has to really understand where the limits are with regards to running offshore transactions, especially out of Europe into Africa, and this is also why, for example, we cooperate quite a lot with DEG, German DFI. And then also, of course, CDC.
Great, thank you. And when we're talking about private capital markets, of course, we're talking about a range of different asset classes and different kind of liquidity appetites, risk return appetites. We're talking here about equity, more or less, I would say, with you two. Of course, Eric, you're in listed vehicles, but you can, I think, speak to to the generally across asset classes, and Martin, your infrastructure and debt. What are we seeing in terms of the differences in Africa across those different asset classes? Are some riskier than others? Are some more opportunities than others? What are the different profiles? And perhaps I'll hand that over to you, Martin.
So in terms of the private credit side where we are sitting, both funds have similar type of results. Obviously on the infrastructure side, it's pretty long term. And the returns that you are making are decent. If you go to global investors, they do expect a bit of a premium over what they would get elsewhere because of kind of an Africa factor, which I also find interesting, but then you really have to sit down and look deep into these projects and present actually how they are performing. So, and then they often get quite comfortable, and they also like very much the often impact and ESG agenda attached to these kind of assets. On our multi-asset funds, which are called credit opportunities, we're largely on the senior debt side. And I think those funds are typically meant to be a complementary to the commercial banks, and I think there's a lot of opportunity for specialized funds like that. And we should also see quite increased appetite to look more into those funds from institutional investors. But you need to reiterate the Africa story, the ultimate long-term growth story. The opportunities are out there, and you need to pick your opportunities quite carefully.
Fantastic. I'm going to jump to the final question, just to give time for Q&A. So the AFSIC conference is bringing together stakeholders from across the spectrum, lots of different types of individuals and organisations here. And with interest in investing in Africa is the thing that pulls everybody together. How might we collaborate more moving forwards to increase opportunities for investments, perhaps to also challenge some of the constraints that we've talked about today, as well as maximising those opportunities? Anna Maria, would you like to start?
Sure. I mentioned earlier that partnering with people that have boots on the ground would be quite important. We are large investors into co-investments with our GPs. And the way that we get to know new GPs is to actually start to see some deal flow and start looking at how they look at investments, their investment process, and start getting to know them better. So on that, we do have a team based in London that covers co-investments in Africa. So that would be a good way to start partnering with groups. And just on the tech side, I think that's probably our biggest focus at the moment. So any type of tech and kind of healthcare opportunities, that's what we'll be keen to work with somebody that has presence on the ground.
Great, thank you. Eric?
Oh, I have a view on this. Because our firm has looked at doing private equity in Africa, and because our background is public space. So the challenge is that, most institutional investors are looking for like, hey, well, what's your 5-6 year track record in private equity? And we're like, oh well, I don't know, not many people we don't have that. But we've invested there and spent many days running in taxi cabs and all these places and have lost and made money, but we haven't done private equity. But so there's a bit of I think there's going to need to be, from the institutional side, a little bit of flexibility to help the asset class and the ecosystem grow a bit. And then also, like you mentioned with the FX, I think the investor base has to be a little bit longer. It has to be longer term. I know everyone says they are, but yeah, with the Africa, with the certain times, certain countries, you do have FX liquidity problems in a way that you don't have in other markets. And so, yeah, that you do need to have that long-term money to make it happen.
Yeah. Martin?
So we try to cooperate on 3 levels. So one is like on the structural level, already mingling public and private money. Second level then would be like on the target GPs, so as in like co-investing with public investors, which is in our case it's quite interesting because we play a catalytic role, as in those GPs which are then invested into by like someone who's really conservative as Allianz is, that then is a bit of like a blueprint for other commercial investors. So they know, like we've been through the DD, we concentrate a lot on commercial topics, like our side letters look different than DFI's side letters, including of course like the ESMS lingo. And then the third level also where we cooperate is like on the ecosystem builder. So we run a technical assistance facility, which also should support like small medium enterprises. And this is how we try to get that going.
Great, thank you. Martin, final word from you on collaboration?
I think one of the biggest opportunities out there, I think, is that, and if you look at what I think is really needed, is more kind of platforms in which institutional money can flow through. So that's working on examples like what we're doing is with an Emerging Africa Infrastructure Fund, which is partly backed by European governments, but enables institutional vectors like Allianz to come in based on a portfolio, based on a team with a track record, and pull that capital in there and deploy that. I think there's more opportunities that for fund managers locally that have pools of local capital who can address the local entrepreneurs. And I think it's still very difficult to do that, from London. So you need to have regional pools of capital, I think, that can support entrepreneurs locally, because there's lots of energy out there, there's a lot of ideas, but finding that match between local entrepreneurs and international investors, and as well as local investors, I think needs to be complemented. Banks are doing that, but I think if there are different pools of capital, in equity, mezzanine, credit, then I think you can see an accelerator happening in Africa.
Great, thank you.
Can I mention something like on the non-performing loan project? Like that came to me, I learned about that from the IFC, and they have an interesting thing they're doing there where they're trying to, like they really want this to get this going, but it's a totally new asset class that doesn't exist. So they are investing in the asset managers and telling them, we will help you, and when you launch a fund, we'll invest in the fund. So like if they're really just trying to, so it's kind of, I think it's the ideal thing for an asset manager. Like this is something new. We don't know if we're going to get investors. We don't have the resources to build out all this stuff if we don't know anyone's going to come in. So they're like, yeah, we'll help you with that, and then we'll come in with the fund. So, and you have an anchor investor, so everyone comes in, knows that we've done the work, and so it's a real, I think that's a cool model.
Great, thanks Eric, and thanks everyone. It sounds like from what I'm hearing here that we really need to test out new models through collaborations, perhaps potentially including DFIs and others. And then there's an opportunity in areas that are a bit more proven to bring in local forms of capital, global forms of capital, to really scale those up. We've talked a lot about different aspects of the question. I wonder if anybody has any questions either from the live audience here or online. I can see we have a question. Steve.
Thank you. There's often a mismatch between the perception and the reality of risk in Africa. And Mazen, you remarked on how the African infrastructure assets were performing better than other global infrastructure assets. Is now the time to reset the perception of risk in Africa to allow more projects to be bankable? And if so, what's required to move the dial?
Did you catch all of that? I think
we
that
can't
was
hear. I think we need to
around
close the
perception
doors.
of risk.
Well, I think that's what I was trying to explain. Indeed, there is a perception issue. I think out there that I'm trying to address here, and our experiences is quite different than people say. I even, when I meet people that within my own firm who said work in Asia or other emerging markets, and I explain about some of these projects, and they say, okay, do you make the returns required for this? Because we're operating in places that are considered fragile or have political issues. But then again, I have to explain, actually, if you look at our loss rate over the last 18 years, you see them thinking, oh, well, that's actually not what we had expected. So I think we need to tell the story more often. And I think, Moody's, for instance, reports on it. If you look at default rates across infrastructure across the globe. Africa is included there. I think the market is growing. There are more and more projects. So Africa has also a challenge to keep up that track record, right? Because as the market grows and there's more projects, and perhaps you get looser governance, or those projects are structured not in the way that it used to be, then there could be potential for default rates slightly going up and becoming more on average with the rest of the world.
Does anybody else want to take that? Any of that?
I think we've seen returns have been strong compared to other frontier and emerging markets. I think from our side, again, we're a dollar-denominated investor. So if we do the exchange from local currency, it's been great. If we look at dollars, it hasn't been as strong. And again, it's the exits. We need to start seeing more of those. The returns are good. There's great opportunities, especially in the sectors that we like. We just gotta wait a couple more years until there's more exits and more or less volatility on the exchange rates for us as U.S. investors.
Maybe also just to add a bit in on that. Also, if you see private equity as an asset class, it's just not as mature. So this is just not comparable to the US. Europe is not comparable to the US yet, and therefore also if you look into private equity in Africa, there can't be the same sort of level. But it's and then if you compare it with other emerging markets, of course it's quite positive what you see in some countries. But I think one should be aware there are plenty of risk, which is also why mobilization of private capital at scale really is difficult, which is why we really encourage to build blended structures. As we see that one way to mobilize that vast amount of capital required.
Yeah, and I'm hearing also around the local currency side, around local investors, and with the knowledge that less than 1% of local pension fund money inside Africa is put to work in the private markets, compared to around 26+% in other markets.
And if I may add to that, also what we see as an asset manager, mobilizing capital, therefore the investors would only really put in substantial amounts. So this is also we will launch another blended vehicle rather soon on the similar back. As otherwise we struggle. On the debt is a different side. Debt is more doable than equity, but equity mobilization of private capital in the absence of a blended structure at scale, I do not see.
Yeah, no, I do think that's a very important point to differentiate between the two different between debt and equity in this space. But I want to just see if we've got any more questions. Do we have any questions from the live audience here? Seems not. Do we know if we can get questions from our online audience? No. Okay, fine.
I have a comment on the returns. I mean, just from my own experience, because I've been investing in both African debt and the equity side. The equity returns have been terrible, and it's been really hard to raise money for Africa when the U.S. and other markets have been doing so well. So I think that's been a challenge. And mostly the businesses have been good, but just investor money's been coming out of Africa and everything is derated. So you've got lots of stocks in the public markets trading at 5 times earnings. So it's very, actually a good entry point, but it's been a tough road getting there. And then the fixed income side's done very well. All the global search for yield has really helped. People have done very well with U.S. dollar bonds, sovereign. So the African euro-dollar market's been huge. There's about $100 billion. I mean, when I started in 2014, there were maybe $15 billion of issuance. Now there's over $100 billion of African sovereign debt issued. It's been a really popular thing. And also local currency debt's been really good too. Egyptian treasury bills have been amazing. So the fixed income side in Africa has been really good. Equity side's been tough.
Great, thanks, Eric. And from CDC side, what we've really seen a lot of is a rise of interest in private credit funds, and that's something that I think is really something to watch. And then there'll be other people from CDC speaking about private credit funds. It's not, of course, it's not the only thing that we're looking at. We're looking at lots of different things, but I think a very interesting nascent asset class to watch out for. I think we have just 2 minutes. So and I don't know if anybody has some final thoughts that they'd like to share at this point. If not,
I was going to say one thing, sorry.
please do, Eric.
It was on the geography thing. There are so many interesting geographies right now. From East Africa, I'm even interested in South Africa, Zimbabwe, Nigeria. Ghana's totally ramping and doesn't get enough attention. A lot of people don't even look at the West Africa piece because of the, the kind of the language thing, but I'm interested in that too. Egypt's going off. I mean, they're in different ways and, different industries and things, but it is actually a lot of different things. I mean, there are a lot of geographies that are exciting.
Yeah.
So.
No, I think that we're hearing a lot about some exciting opportunities, and I know that there's a lot of different speakers talking about different technology opportunities. As you say, Stephen Priestley's just been talking about the FI opportunities there with new challenger models coming through, etc. So,
can I say one other thing on this? Because I don't think people talk about it enough. Since 2013, the leadership in Africa is changing. We're all talking about mobile money and fintech and stuff like this, but the new president's coming in. It's like bit by bit. The new guy in Zambia, the new Cyril Ramaphosa in South Africa, the new leader in the DRC, Cote d'Ivoire, Benin, and it's like this pot with all these little bubbles popping up of better and better leadership. And I think that's another positive trend that I don't see anyone writing about just how that's all coming together. Anyway, so.
Sounds like a potential thesis for you.
I have written about it. Just me, though.
Fantastic. No, thank you so much. It's great to see this optimism. So I think we'll wrap up there. Thank you very much to the audience. Thank you to AFSIC. And thank you very much to our panel, Martin, Anna Maria, Eric, and Martijn. Thanks, everyone.
Thank you very much. If I could ask the panel to exit to the back, and there'll be a new set of speakers coming in. And can I just really double down on the point, as the UK's Minister for Africa recently, the change that we have seen in leaders, HH in Zambia being typical, there really is a different macroeconomic framework coming down, which will give greater currency stability.